All right. Good morning, everyone. Let's get kicking. Okay. Um, okay. Last night's session, the S&P was strong to say the least. At one point, you can see we are up about 2% on the Nasdaq. The S&P up north of 1.5%. We did pull back slightly into the close, but I mean a very bullish session out of the S&P and out of the Nasdaq and the Russell and the likes. We were driven really by, I would say, earnings on the day. If anything, we had Caterpillar. Well, let's take a step back. We were also driven by early in the European session. We got some PMI data out of manufacturing PMI numbers out of Germany, which came out significantly better than expected, moving from contraction to significant expansion, and that really caught, I think, some of the European markets on the wrong foot. I think a lot of people leaning on the shorts, trying to catch some momentum there in the morning, and we had a huge reversal. We were down about 1%, north of 1% on the DAX in the morning, only to finish up 1.2% on the session. That really got the States turning around, and then you had Caterpillar and 3M and GM, but Caterpillar and 3M, I think the two that really got the markets going. Caterpillar obviously being a big global bellwether, coming out and with significantly better numbers, up about 5% on the day. 3M also a great, industrial that conglomerate that has its, fingers in a lot of different industries and a lot of different pieces of the economy, also having better than expected numbers, and I think that just quelled the fears for the markets on the day. So really got things kicking. We also had solid jobless claims numbers, so everything really good on the day. We did have Amazon that came out after hours with shocking numbers, but I think in terms of the big picture, I think it's probably more stock specific. In terms of the big picture, markets got a big boost yesterday. We didn't see a huge follow through in Asia, and I think that's probably more because of um, the Ebola case that we got in the States. That's why you're seeing futures down a little bit this morning, I would suspect. There's one of the doctors from the U.S. who's been in North Africa treating some of the Ebola patients, been diagnosed with Ebola. He's now in New York City. Apparently went bowling last night, probably, or sorry, the day before. So a little bit worried about that. Anyway, bottom line is I think that muted Asia a little bit in the follow through that we saw in Asia. You can see there that we did manage to get a little bit of bounce. We finally got a little bit of a dead cat out of the mining stocks in Australia, but anyway, so I think it's harder to read Asia simply because of the Ebola thing. I think markets are still positive. The one thing I'll mention is, I can remember all the different kinds of major health scares, the bird flus and the likes over the past few years that have really started when they rear their head. Markets kind of get shaky for the first time or two that they talk about it, but unless things progress and progress quickly, markets usually start to kind of shake it off. So I think this could potentially be a great buy on the news, or buy on the rumor story. Sell on the news, buy on the yeah, sorry, selling the rumor, buying the news story here. So when we get this news, I think it's mostly priced into all the stocks that it can be priced in, and I think we're going to get a huge reversal here, potentially to the upside in some of these stocks. Watch the airliners, particularly in Europe, and those stocks today. They'll probably open down, but might be a good opportunity to pick them up for a bit of a gap fill this morning. All right, charts of interest. We were talking to you guys yesterday. We mentioned about China starting to rear its head again. We had we've seen a lot more China in the headlines over the past 3 or 4 sessions. Really good chart here, and I think this is another thing that's starting to come into play, because yeah, China's been booming, but the whole time China's been booming, they've been they've been booming through issuing in copious amounts of debt, and you can see here now we're over 209% of GDP. I saw a forecast yesterday saying that they're expecting to be 240% of GDP by next year, which is scary. Would be, I think, one of the most debt-ridden country in the world at that point. Uh, and then we had debt servicing as a percentage of GDP all the way at 33.5%, and that's really what becomes worrying because if you get a bit of a downturn in China, then you're going to get just enormous debt fears from that side of the world, and that's really where I think there could be some potential panic set in equity markets. So just keep that in mind. I mean, think that that's a very very broad statement to kind of make. I mean, that could happen in 2 or 3 years. It could happen in 2 or 3 months. The bottom line is if you see that sort of thing coming, it can really, really get messy. So keep an eye out for that. Right, nothing to report really here locally. We do have EOH, which is last day to trade today before 1 rand 20 divvy on Monday. We have some earnings coming out in the States, some more diversifieds like Procter and Gamble. Then we've got United Parcel Services and Bristol Myers Squibb. Right, let's get into some market data. Very little today. We have consumer confidence out of Germany. That was a little bit better than expected. We've got PPI out of Spain. We've got GDP year on year out of the UK at 10:30. That'll be one to just keep an eye on. And then new home sales in the States later. So very little on the market data front. All right, in terms of charts today, guys, we're gonna keep it a little bit simple. The one theme that I would say that we can really say with confidence is that miners just continue the route. We had we had production numbers out of the whole Anglo's basket yesterday. Kumba being one of them. The production numbers on iron ore look great. The shocking thing um, is that we had that their production was up, I don't know, 37% or whatever it was, but they only sold about half of what they produced, I think, on the quarter. So they went on the period from having about 3.5 million tons to about 6.3 million tons of iron ore stock, which I imagine is probably happening everywhere else as well, probably giving people more reason to think that the iron ore price can actually continue to fall if there's that kind of stockpile around, that kind of surplus around. China's as weak as it is. Anyway, this is kind of ugly here, but we do have a kind of a broad, rough flag that we made in in Kumba, and it kind of looks like it's dropping to an extent. Like I said, it's ugly. It's not exactly classic, but to me, it's kind of dropping support. We had a major reversal there yesterday, so we pushed up nicely above the previous day's close. We got almost to 300, and then we made a huge reversal, traded all the way down to about 275 at one point. We did close a little bit higher in the last 30 minutes, but ugly day nonetheless out of Kumba. All right, let's look at Lonman here. Lonman also uh, putting in a bear flag, just continues to take out lows, continues to, kill all these guys that think that they're value hunting, looking for opportunities, ripping the face off those guys. Again, we got Billiton as well. Billiton also kind of dropping out of a flag. Billiton actually traded really well into the end of yesterday's session, so you got to watch this one, but still dropping a very clearly defined bear flag pattern here. And I mean, this thing moved in a straight line down here, more or less from 370 down to south of 290. It did that in I'd say 40 trading days, which is that's quite vicious. It doesn't even give you a proper day cap bounce. I mean, this thing just kind of consolidates here and then drops out the bottom again. So it's terrible, terrible action, and that kind of action really has to make you nervous, especially if you're trying to pick bottoms in these things. And the next one is Anglos. We showed this yesterday, and we showed the little wedge pattern that we're making here, or that we made in Anglos. We dropped out of the bottom of that on Wednesday's close. Yesterday just gave us confirmation after earnings. Like I said, we did bounce on all these stocks a little bit into the close, but still looking ugly. I wouldn't think it would be a bad play here if we did get a little bit of a bounce today to maybe use it to start to fade these things again, because I think all bounces really in these stocks in the near term are still to be sold. And that's it for today, guys. Thanks a lot.